Welcome back, everyone. If you've been following my market maker video series, you know I've covered market makers, why market makers obsess over staying delta neutral, and the world of crypto options and gamma squeeze. So I've done 4 videos. I highly recommend you checking them out. So today, in this presentation, we're actually extending this topic a bit and trying to answer another important question, which is, who are the real winners when you trade Kaspa? We are trying to answer another important question, which is, who are the winners? Who are the winners when you trade Kaspa? And yes, surprise, surprise, the answer is the market makers and exchanges. But the real question here is, how much do they really make and what are their revenue sources? So in this episode, we'll unpack the trading landscape, how market makers profit from your trades, and how exchanges act as the ultimate gatekeepers. So stick around, this could change how you view every trade. For most part, crypto trading volumes are split between spot and perpetuals, or otherwise sometimes known as perps. Based on this month data, February 2026, Kaspa spot volume averages around 10 million. That extrapolates to around 300 million in monthly spot volume. It's important to look at the volume first before we start to analyze how much market makers make from these trades. So now let's look at on the derivative side, right? So we just looked at the spot. Let's look at what happens on the derivative side. We know derivative is around 6 times higher than the spot volume. Now that's exactly where the action explodes. This is a screenshot from CoinGlass. This data shows that the daily perpetual futures hitting around $60 million daily, 24 hours, roughly around $60 million. That means monthly, this perpetual volume sits around $1.8 billion. So this is monthly $1.8 billion on perpetual volume. So some people might ask this question, why there is such a massive skew in the trading volume? Well, it's pretty simple answer. Perpetual allows leverage bets on the coins, right? We're looking at Kaspa in this case. But you can take Bitcoin, you can take Ethereum, you can take any of your favorite coins. Perpetual allows you to take up to 100x bets. Plus, on top, as we have discussed, perpetuals are nice and cheap instrument for hedging for market makers and whales. So all in all, on Kaspa, we see a total combined trading volume of over $2.1 billion monthly. That's a massive, massive number for a coin with less than $1 billion in market cap. This volume is really where market makers and exchanges feast. Let's quickly revisit some old concepts. Remember, market makers are the ones providing the bid and ask, and they aim to stay delta neutral in most cases. Market maker makes money via 3 main ways. So that's through bid and ask spread. That's through exchange rebates. We'll look into that. And the third one is from the derivatives play. That includes funding rate arbitrage. So let's get into each of these and start with the Kaspa spot. Now, different market makers specialize in different strategies. So in this video, we are only going to look at the vanilla market makers. These market makers make money by providing liquidity to a project and exchanges. So their aim is to stay delta neutral as much as possible. So let's start with Kaspa spot market and let's look at how much they make. Typically, we see a tight bid and ask spread on Kaspa spot between 0.1% to 0.3% due to decent liquidity provided by market makers in orderly market. But time and time again, we see these orderly market becomes wild and spread becomes wider during volatile times. But in most cases, spreads stay within the range of 0.1% to 0.3%. Let's say the average spread is 0.2% on 3-cent Kaspa price. If a market maker handles 30% of the daily spot volume, which is easily possible by one of the top firms, let's look at the numbers. Based on the current volumes we looked at, this would equate to around $3 million in daily traded volume by this market maker. And at 0.2% spread or 20 basis points, their daily revenue nets out to be $3,000 and monthly around $90,000. That's a pure spread revenue. That would have been okay, but that's not the only revenue market makers make. Market makers, given they provide a service to exchanges reward market maker. An exchange would charge their customer a trading fee called taker fees, and in most cases, not always, in most cases, they would pay a rebate to market maker for providing a market on their exchange. So let's quickly look at the rebates as their second source of income. Rebates, in many ways, is one of their steadiest source of incomes. Many exchanges like Maxi, Bybit, and Gate.io incentivize market makers with negative maker fees, or otherwise known as rebates, often negative 0.01% or sometimes more for handling big volume on pairs like USDT. That means for every dollar of liquidity they add and orders they fill, the exchanges pay them instead of charging. So let's quickly look at the numbers. Going back to the same variables, Kaspa spot averages around $10 million daily. A major market maker handling around 30% of the volume, around $3 million in daily volume. So at a conservative negative 0.01% rebate, their earning becomes $300. And over a course of a month, you would be looking at $9,000. That's pure low-risk income just from being the liquidity backbone. Rebates aren't flashy like funding grade arbitrage, but they're a reliable source of income. Now, coming to the third and probably the most important source of income, and the biggest one for market makers. So just like spot, market maker continuously provide bid and ask spread on perpetual order book and earn from spread. And just like spot, they also earn from rebates. Now, along with these two sources of revenue, they also earn from funding rate arbitrage. Now, you might ask, what exactly is funding rate arbitrage? Funding rate arbitrage is another strategy used by market makers to profit from the difference in funding rates across exchanges. You know, perpetual futures don't expire, so funding rates are periodic payments. It happens every 8 hours between longs and short position. On perpetual futures, as long as the position stays open and the rate changes every 8 hours, you have a positive funding rate and you have a negative funding rate. Positive funding rate is when longs pay shorts, and that happens in case of bullish markets. And the negative funding rate is when shorts pay long. So in case of bearish market, when there are more short position open compared to long position, or when on that exchange perpetual trading price for an asset is below the spot price. By exploiting rate discrepancies or by being efficient, market makers can go long on an exchange with a negative rate and short on another exchange with high positive rate, and in both cases receive payments for counterparties every 8 hours. All right, let's look at the numbers. Using the same old variables we have used across this presentation, we have roughly 60 million daily perpetual volume. A major market maker with 30% of the market share would handle roughly around $18 million in flow. So these are the variables we have. So $60 million in daily perpetual volume, and a major market maker with 30% market share would roughly handle $18 million in flow. Now, compared to spot market, perpetual markets are very liquid and spreads are in narrow range between a range of 0.05% on a highly liquid pairs like Kaspa USDT perps. So at 0.05% or 5 basis point, their daily revenue nets out to be $9,000, which would equate to $270,000. Do you see why market makers and exchanges love perpetual? And this number is when the volume is down, when the price of Kaspa is down substantially from the all-time highs. Now, their second source of income on the perpetual front comes from rebates, similar to spot. This would equate monthly to $54,000 just in rebates for providing this liquidity. And their third and perhaps the biggest source of income on perpetual front comes from funding rate arbitrage. So let's look at the numbers. Market makers will hedge long perpetuals on negative rate exchanges like KuCoin at negative 0.0595% to receive funding, and will short underlying on positive funding rate exchanges like Bybit at positive 0.01%. Their net rate differential would come down to 5 basis points or approximately 0.05% every 8-hour interval. This would roughly equate to $15,000 daily or $450,000 in net new revenue every single month. Now, I'm using the term revenue carefully as they do borrow money to provide liquidity at a certain rate. So I'm not saying this as the profit, I'm saying this as the revenue for the month. Adding all this together for this one market maker with 30% market share is making $873,000 per month for one coin. And this same market maker will be providing liquidity for probably tens of coins, if not hundreds of coins. And then comes the exchanges, perhaps for my next video.